All right, all right. Ladies and gentlemen, Rodrigo here with Matt Maley, Chief Market Strategist at Miller Tabak, lead trader at the Stock Picks Inner Circle chat room. If you guys don't know what it is, you will find out today. If you're trying to learn how to trade, this is where you need to be. If you're already an active trader, this is also the place you need to be, okay? This is the Trader Roundup, and we're going to be talking about trade ideas, options, educations, setups, market discussions, a whole bunch of stuff here. Big shout out here. Katie, Kat, what's going on? Good to see you here. Good to always see you here in these sessions. Christian, Dog, Dave, David, Easton, Maria, Steve, Dottie. We got a great crowd here today. I want you guys to know that we will be talking about a lot of trade ideas. So just know we have a long session here to go. Any questions, put them in the chat. Let's go ahead and bring on the man himself, Matt Maley, Chief Market Strategist.
Damn, son, where'd you find this?
All right. Let's go ahead and bring on Mr. That was a good one. Huh?
Love that one, Rodrigo.
It's got to keep it fresh, man. So
that's great.
How was your day there at the chat room? I know it's active. You're trading all day. Tell us a little bit about what happened.
Yeah, it was kind of interesting because I will say today was a little bit less active, but that was what we expected, simply because we got the big Fed meeting tomorrow. So we did some setup trades late in the day today, which look like are going to work out real well. We'll talk about them in the chat room. We bought some advanced micro devices calls, some Taiwan semiconductor calls. Everybody was saying, oh, no wonder. So I'm just looking at my off screen here. I typed in Archer Daniels Midland instead of. So there's a stock that's up 6%. So these options should be up nicely. We also own some Taiwan semiconductor options, but these are the types of things that we try to take advantage of, where a stock in a group is down and out, and we went the other way, and it should be able to profit for us tomorrow morning. Anything can happen overnight, I suppose. But I assume at 5:30 they've already started their conference call and the news is out because the stock advanced micro was up about 1%. Now it's up 6%. So this should work out very nicely. So again, so that's what we're doing today. A little bit more quiet because we just, the market opened down and then traded down a little bit and then traded sideways the rest of the day because everybody was sitting on their hands. But that's one of the things. I mean, somebody asked me this yesterday. I was like, hey, what about this? What about that? I'm like, relax a little bit. Sometimes doing nothing is the best thing because you get into options and the market moves sideways. Both puts and calls deteriorate. They don't do anything. Sometimes the right thing to do is sit on your hands. We did do a few trades, but very small. And then we did some at the very end of the day today because we want to wait and see what the Fed happens. And then we'll see a lot of activity. Believe me, tomorrow morning will be the same thing. Probably won't be doing much. Midday, we're going to get a bunch of trades on before the meeting. And then Thursday and Friday are going to be very, very active. So to answer your question, sometimes the right thing to do is not a lot. And that's what we've done. That's what we did today. But boy, that's going to change real fast as we go through the rest of the week.
Right. Smart trades, not over trading. And
exactly.
Matt, all right. So folks, we have a lot of people in the chat. We have hundreds of people watching in the chat. Go ahead and let me know if this is the first time you're watching or any of these sessions. Put a 1 in the chat. If you've already been here before, give me a 2 so that we know how to take the conversation. Joseph, you're welcome. That's what we're here for. Benzinga is, it's the ring for retail traders, right? This is where every retail trader should start. All right. So while we let those numbers come in there, Matt, I already know your background, 40 years in Wall Street. You've been out there on CNBC and Bloomberg. But for those that are watching here for the first time, if you can give us a brief introduction of your 40 years in Wall Street. I believe you already had the 40-year anniversary or not yet?
No, that's next, literally 4 weeks away. 4 weeks away.
Okay, let's not forget. We're going to
almost exactly 4 weeks. Yeah, it'll be 4 weeks from yesterday, I guess will be the day. So, I started out on Wall Street. And I was I did a bunch of gopher work like everybody else does when they first start out in any business. But they liked what I was doing, brought me onto the trading desk less than a year later. But what I did is that I worked on the institutional trading desk at Solomon Brothers. For those who are younger, may not have heard of Solomon Brothers, but back in the day, it would now fall under the Citigroup umbrella. But back in the day, it was the most important and powerful and active trading desk on Wall Street in the 70s, 80s, and 90s. I was there for 15 years in the 80s and 90s. and then went to Merrill Lynch for 10 years, which is the biggest trading desk and one of the most important ones for 10 years. So 25 years trading. So as a strategist, though, I learned how to trade, and I learned how to what's going on, what should happen, and what is happening right now, and what should happen in the next. I'm sorry, what is going to happen in the near future, not what should happen, not what the textbooks tell us should theoretically happen. Because the one thing, and it's kind of my mantra, my saying is like the people you hear it on the TV all the time. The market's always right. The market is not always right. The market is only always right eventually. And that's the thing. And I learned what that is. I mean, the theoretical thing could be, hey, we love this stock. We think you should buy it because, 10 years from now, and that's great. You should have that bucket of long-term investing. And if you can, oh, geez, I don't mind if it goes down 20% because I think it's going a lot higher. Great. But for the trading, if you want to, enhance those returns, and we've really done that this year in the chat room, you enhance that with that active trading bucket. That's when you want to know what's going to happen, what's really going to happen. I don't care what the theoretics think a while from now. I mean, the advanced micro devices, everything you heard in the last several weeks, several days, and several months has been negative. So it's like, why weren't you making a negative bet? Because of what I know is that when everybody had moved to one side of the boat, the odds were pretty good that the stock was actually going to bounce on their earnings, even if the earnings weren't all that good. And sure enough, say now it's up 5%. So these are the types of things you learn what is going to happen. And again, most of the guys who are strategists and are people that are former analysts, former
economists, that's
et cetera. And what I did this year, because at the beginning of this year, when 95% of the people of the strategists on Wall Street were bullish and saying buy, I was saying raise cash, make negative bets, and we've killed it this year. We're way up this year, where most people are down. We're up several 100% in our trading account, and it's worked out really well because we concentrate on what is happening, not what should happen.
Right. I mean, Solomon Brothers, Merrill Lynch, Miller Tabak, you've been all around. And here's the interesting thing. Like, my dad's an economist, and I know economists and traders, they don't think the same. So the fact that you're able to think like a trader and think like an analyst, you usually don't have those two kind of parts of the brain. You know what I mean? Like,
right.
Like that.
And there's nothing wrong. Believe me, we need economists. I'm not trying to say, and some people say economists, they're like weathermen, they're always wrong. It's like, no, we need them. We need reading them, but they're more looking at the big picture, and they're supposed to look at the theoretical stuff. That's their job. For me, as too many of those strategists though take that and still talk theoretical stuff, and they start saying, well, the market shouldn't be down. It shouldn't be down. And it's down 25%. And it's still saying it shouldn't be down. I don't care what it should be. I care what it is doing and what it's going to do in the next couple of days, next couple of weeks, next couple of months. Not where it should be a year from now.
Right. And again, folks, what we're going to be talking about here are simple calls, simple puts. Matt Maley specializes in trading the volatility. We're not going to talk about condor spreads, butterflies, nothing like that. This is anybody that opens an option, that trades options. This is the most simple type of trade. So anybody can do this, right? And Desi, we have somebody in the chat. She put it publicly, so I guess everybody else can read it. But look, there's people here, Matt, that have gotten it, bad, trying to wing it, because they saw it on 2020 and they probably think that you can still do it. But like during 2020, everything was going up. Nobody knew why. Well, if you're new, you don't know. But then now you still don't know even why it's going down, right? So it's winging it is probably winging it and trading alone. I mean, I would say those two things kill most retail traders.
That's, it's the one thing. It's kind of funny because it's one thing that we really push hard on the chat room. But if you do it somewhere else, that's fine too. I mean, we're doing really well here. It's a great chat room, but you can't do it alone. I mean, it's very, very difficult if you're a professional on Wall Street to do it by yourself. You think all those trading desks and those hedge funds or Goldman Sachs or Morgan Stanley, the real big houses, the real big brokerage firms, you don't think those traders, I mean, there's a reason they're not trading in 40 different offices. They're trading in a one big trading room, and there's guys who are making millions of dollars a year. They don't have a private office. No. It's like you think about, big executive, he must have his own private office. No, he sits on a trading desk with two guys he can reach out and touch on both sides, and they're talking all day long. Hey, did you see this? Hey, did you see that? This guy's trading the auto stocks. The other guy's trading the financial stocks, but he's like, hey, did you see, the interest rate just did this. That's going to be bad for my. That's going to be good for my banks, but it's going to be lousy for you because all the people want to borrow to buy a new car, and then they're going to get hurt. They're constantly talking back and forth, and so if they're not trading alone, how in the world are you going to do it trading alone? And it's just when you're and again, you don't have to be in it all day long every day, but just to have these things. And one of the things that I love is that I'm certainly not the person with all who has all the ideas. People are giving ideas all the time in the chat room, and they're helping each other, and they're throwing stuff up. What do you think of this? What do you think of that? And we say, something. I think that's a horrible idea. That's my job, is to let you know. When you have a financial advisor, they're yes men, okay, or yes men or yes women. For me, it's like, no, I don't. I think that's a bad idea. Or, geez, it's a good idea, but I'd wait a little bit. Or, hey, you kind of missed that one. It's okay. There'll be plenty more ideas. You're gonna have, and when you have the losses, it's like, hey, guess what? You're gonna have losses. You trade. I don't care who you are. The greatest trader who ever lived. You're gonna have losses. Cut the exposure. Risk management is another thing we do here in the chat room. We're helping each other do the risk management. Get out of these things before they become huge losses, and let the big ones run for a while. So instead of making 10, 20%, you're making several 100%, and then which is something we've done on many occasions this year. So that's the whole idea here, is that so many people, it was in 2000, the second half of 2020 and pretty much all of 2021, just buy something and watch it go. And that's not the real world. It did work for a while. It's not working now. And now, but the greatest thing is that the markets moving in both directions, but we now have the tools. We have weekly options on all the biggest stocks. We have options in all the indices, all the major indices that expire 3 times a week. We have inverse ETFs. We have leveraged ETFs. We have options on ETFs. There's all these things that only the institutional investor could really take advantage of in 10 years ago. And now we're going through this bear market. The tools are there. And trading alone is very, very, very difficult. And like I said, I've been doing this 40 years, and I'm learning something new every day. And I have trades. I still have trades that I lose all the time. You as I always say, you don't want to be batting 350. 350 in the Major League Baseball, you are going to make hundreds of millions of dollars because you're such a great hitter. Yeah, batting 350. That's not our goal. Our goal is bat 600, 700, 800. Okay, but we're not going to bat 1,000, and we don't worry about batting 1,000. We also don't worry about, hey, I just made 200% on my money, and yet if I had waited another 2 hours, I would have made 250%. Man, if you're going to beat yourself over that after making triple on your money, you shouldn't be doing this, right? So, don't worry. If you get a winner and it ends up getting more, don't worry about it. Move on to the next one. If you lose, move on to the next one. The whole idea, though, is, of course, is you want to be winning a lot more than you're losing, and that's what we've been able to play it.
Right. There's definitely a lot to cover here, Matt. A lot of people would like to see how you apply your strategy, not just to these markets, but all the markets we've been living through. Maybe you have some examples that you could show the folks here, and kind of give us your thought process of how you got into the trade, what you were thinking about, so that many of these retail traders can get a sense of how somebody with 40 years in Wall Street looks at this.
Well, let me share my screen here. Hold on. See if I can get it up here. Whoops, sorry. There we go. Oh, okay. Sorry about that. Let me just move you probably can't see this, but there's a thing on my screen that's blocking. There we go. Sorry, here we go. My drive. That's not it. There it is. Okay. And let's see if I can't. This share. Let's see if we can see it better. Oops, that's not what I meant to hit. Okay, done. Let's turn that off. Bang. There. So I'm going to blow it up so you can see it better. Okay. Here we are on a trade. Okay, let me just I'm going to set this trade up a little bit first. Okay. What I did back in the fall, basically almost exactly 2 years ago. So I guess it'd be 25 months ago, just over 2 years ago, I turned bullish on the energy stocks. Everybody was bearish, everybody. And I came in, I was pounding the table, and people like Leon Cooperman and stuff loved the fact that I was turned bullish on there. But there are other people who were saying, Matt, you're out of your mind. Are you kidding? Fossil fuels, this is 2020. Biden's going to be president. Fossil fuels are dead. Nobody owns them. I'm saying exactly. I said nobody owns them. Everybody short them, and all the institutional players are under owned. Okay, none of them own enough of this stuff. Okay, But on the fundamental side, all these people who say the fossil fuels are dead don't know what they're talking about. I want them to be dead. Believe me, we want to go to clean energy, 100% clean energy. You didn't have to do a lot of research to realize that can't happen in the next 2 decades. It can't happen. It sure is not happening in the next 10 years. No, impossible to get there. Okay, so we're going to have to use fossil fuels, and these things are way oversold. So sure enough, I got into the group, turned wildly bullish, pounding the table. Goldman Sachs and Morgan Stanley turned bullish 4 months later. At the end of 2021, they were patting themselves on the back. Hey, we were up 50% in these stocks this year. And I was like, great, we were up 120%. All right. So again, that was going against what everybody thought was the fundamental outlook. The fundamental outlook was really bullish, not bearish. And then I looked at again, you have to combine, you have to use all these different things. You have to look beyond the fundamentals. Look at the technicals, it was way oversold. Look at the sentiment, very bearish. Look at the positioning. Nobody owned them. Everybody was short the group. And we went in, and of course, the group took off. However, so that's the setup to what happened. Here's a trade that we did in June of this year. After being, and actually, it was a couple of times I said, hey, let's walk away. The stocks, these stocks have had a good move. Let's take a breather. I didn't say sell the stocks, but let's just, we're not going to chase them anymore, things like that. But then it came to the end of May of this year, and I was like, okay, this thing's gone too far. It's way overbought. I do think the group is going to go higher, which of course it did, but we got to take advantage of that. Everybody has moved from that in a year and a half. It's been a year and a half. Everybody's been on the bear side. They're now on the bullish side. Let's go out, and we bought on June 8th. So as I turned that way, turned much more cautious in very late May. Finally, when it got to early June, I was like, okay, time to make the move. We came in the XLE, that is the ETF on the energy. It's the energy stock ETF. And I came in. When we do these trades, we give the exact trade. I didn't just say, hey, you ought to go buy some puts on some energy stocks. No, I said, let's go in. We're going to buy the exact trade, so the exact asset, in this case, an ETF, the exact expiration date for the option, the strike price, and of course, whether it's a put or a call. This is what we bought. The XLE, June 17th, $90 strike, okay? And of course, a put. Okay, we bought it on the 8th. The June 17th wasn't the trade date, that was the expiration date. Sure enough, we bought it on the 12th. And even though I had been bullish on the group for 18 months, we turned around, made a bearish bet, and we made 564% in 3 days. Okay, that's what's it. I combined, it's like, hey, I know what the fundamentals are. The fundamentals are still strong, but this has gotten out of control. Everybody's chasing this much. I looked at what we call an RSI chart, relative strength index. The XLE had become way overbought. The big names, Exxon, Chevron, they would become overbought. Every time I turned on CNBC or Bloomberg TV, which if you guys haven't seen me, I'm on pretty much every week. And they were all saying, oh, I love this group. I love this group. Well, I've been loved the group for a long time. And I finally flipped the trade. Whoops. And we made puts and we made some nice money. However, later in the month, after the group had come in and we made all that money on the puts, I came in and said, okay, guys, it's getting too oversold now on a near-term basis. And of course, I've been saying all along, this is a trade that can really, is still going to work over the intermediate term basis. So we jumped into the puts. So now we went into the calls. So remember, we made all that money, made 560% on the calls. On the puts earlier in the month. We came in on a one-day trade right here. Didn't buy them right at the low, but we bought them about 3 o'clock late in the day, just before 3 o'clock. We came in, it was on June 27th, but we bought the June 30th. That was the expiration date. So the XLE, June 30th, $74 call option. And we bought them the next morning, they took off. We got this. This is a little misleading. We didn't get the absolute exact top, but it was, I just, the way I drew it, it came out. So we made 184%, not 186. I just tried to be honest there. But the point is, I didn't get the exact bottom. I wish I had bought them earlier in the day. But again, 186%, think about it. 100%, that's double your money. So 186% is almost triple your money, right? Everybody thinks 200% is double your money. No, it's triple your money. So we almost tripled our money. After making 500% 2 weeks before on the negative side, we flipped over. Now we're on the buy side, on the long side. Again, back to the long side, back to the bull side, and we made 186% on the exact opposite direction. And the point is, you can be nimble, you can make money on both sides. We even had a situation recently where we made money on both sides in the same day. And Rodrigo, we talk a lot about these stocks. That happened to be an ETF. But we do it in all sorts of different markets. Here was the wheat. Remember wheat, all the commodities, all the food, because of the thing with what happened in the Ukraine with the war, all the commodities took off. Well, then they all crashed in June. They all crashed. And I came in and said, okay, this is crazy. It's way overdone. I still, they're still having a tough time getting wheat out of Ukraine and Russia. The thing is very, very oversold. Everybody suddenly turned bearish on it. So we went into the wheat ETF. Now, they say wheat. I know I didn't misspell it. That's the WEAT is the ETF for wheat. So it's like, oh, no, we're not always just buying Apple stock. We're not trying to find the next meme stock. We'll find wherever the opportunities are. This happened to be in the commodities. And we didn't have to call a commodities broker. We didn't have to call the CBOT in Chicago, the Chicago Board of Trade. We just went into the ETF, bought the WEAT wheat futures, options on the ETF. I'm sorry, not on the futures. July 15th, $9 calls. Sure enough, 3 days later, it made 250%. And again, I don't want to, I'll show you more ones that we've done more recently. Here's the TLT. That is the ETF for the, for the treasury bond market, okay? And again, we don't have to call up a bond guy, okay? They trade in the market, these ETFs. We have the tools. We didn't have those tools. In the old days, you would have to go and buy the bond futures. I mean, who the hell's got a contact with bond futures, right? So we go in, we bought the TLT July 15th calls. We bought them on July 8th, sold them a couple of days later on the 12th, the following Monday, and we made 280%. So you see how that, and again, these are in July because I want to get something a little bit more. Here's another great one. This was in the now we're moving into August. Labu, what the hell is Labu? It's the biotech ETF. And we just saw that, I was bullish on the biotechs. We're finally moving into August. People had really sold them off. Remember, the market had rallied. So they were selling all the defensive names, and the IBB, I'm sorry, the biotech area, which is a defensive name in the healthcare sector, had sold off. So I said, hey, let's go out and buy the IBB, which is the biotech ETF. Let's get more aggressive. Let's get aggressive here. So we bought LABU, which is the 3-time levered ETF. We bought the August 5th, $10 calls, and the next day they were up 850%. Now, I wish we had sold them up here and made over 900%. We didn't get the exact bottom. We didn't get the exact top. Anybody who tells you can get the exact bottom, exact top is lying to you. And besides, why do you want to take that chance? You made 800%. I mean, you made almost 10 times your money in a day. Okay, move on. Okay, so again, these are the types of things. Oops, that's the wrong. Again, now we're moving into September. TQQQ, those are the leveraged ETF for the QQ. The QQQ is the ETF for the NASDAQ 100, all those tech stocks. And again, we came in here to a situation where the market was just starting to sell off again. I was bearish on the market. We made some real nice money with some negative calls, but I saw the market was getting oversold on a short-term basis. We came in and bought the September 9th calls and made 166% in just one day. And then and then a couple of weeks later, we came in again on the flip side, bought the September 16th $30 puts. Again, I saw what was going on in the marketplace. I saw that interest rates were skyrocketing again. And so people kept talking about, oh, don't worry about this, don't worry about that. I'm like, don't fight the Fed. Hello. And that's what we did. Again, here's a situation. We bought it in the morning, and by the next day, we had made 250%. So again, some of these trades go for 3 or 4 days. We even have some that go intraday. There are some people in the chat room who do a lot of day trading, but not everybody has that amount of time to do that. And again, I don't want to overstate it here, but I'm just trying to show you that we do it in many different assets. This happened to be the UUP, which is the ETF for the dollar, and we made over 100% in 3 days there. And again, we've made them in October, where we made here 120% in some October calls, et cetera. So it's something we do on a consistent basis. It wasn't just last week or last month. It's been on a weekly basis and in many different asset classes.
Yeah, and before we do move out of the trades, I do think it's important to notate Matt Maley has the record of the highest trade P&L in the history of Benzinga Trade Alerts. Prior to that, Matt Maley had the record. He was shorting Viacom. And then the other record was some Chinese ETF that he bought calls on that went up like 8,000%. And like, there's no other way, unless you're selling drugs, that you're going to make that kind of money. There's no way.
That's and again, we're just trying. We're looking to wherever we can get this. And it's like, where are you going to get? Where in the world are you going to get? Let me just pull this up for you again, so you see. Where are you going to? Okay. Geez, I think China is really getting oversold. We ought to buy it. So why don't we call up? Let's see if we can find a broker in Hong Kong who might be willing, who has never heard of me, might be willing to do a trade. Yeah, forget it. We don't have to do that anymore. That's what you had to do 20 years ago, 15 years ago, even 10 years ago. Now it's like, okay, we have the FXI. See up here at the top, FXI. That is the large cap ETF in China. And you see how it sold off throughout all of 2021. And remember, we just had that situation. It says last weekend's chart. Don't listen to that. That was last weekend's chart when I made the chart in March. It was just getting killed every month. This would get a little relief, and then the China would come in. They'd slam another crackdown on another industry. Started with Alibaba and Jack Ma, and then they went through gaming industry, the education industry, say gaming. I'm talking about the gamblers. Then they did the kids, the video gaming industry. Well, you name it. Every month, and the group bounced back. But then, as we moved into this year, it got absolutely crushed. And why did that happen? Is because we in the U.S. the SEC came in and said, we're thinking about delisting your stocks, and the market just fell out of bed. So what I did is I looked at, even though I'd been bearish all the way along there, I said, okay, people are way too bearish. Look how oversold. This is what's called an RSI chart, relative strength index. And you see how it gets oversold down to this green line. That means it's oversold. And it's a green line because it means it's oversold. Go ahead, buy. And when it gets up to the red line, stop buying. Don't buy up here. But then that's up at the 70 level. This is down at 30. You see how it's 30? It got down to that green line. It was a nice buy. See the green line in May? It was a nice buy. Okay. Look at this one though. It got ridiculously oversold. I looked it back, and I went all the way back to when it was instituted 20 years ago. This is by far the most oversold it had ever been. And so I'm thinking to myself, okay, it's ridiculously oversold. Plus, I also know that we just made them look really bad, and their market has fallen out of bed. And President Xi is not going to let this stand. He is going to make sure the stock market bounces back. Okay. And sure enough, so I came in and said, let's buy some calls. The next day, market rallied 27%. Can you imagine if the Dow Jones Industrial Average rallied 27% in one day? Well, that's what happened. This RSI spiked up. Okay. And we had bought on that day, on the 15th of March, the FXI, $18, $30 calls. When the market opened, now remember I said earlier when something was up 800%, and I said, let's not get greedy. You got to sell. Well, this opened up 1,000%, but I just said, no, we're not going to sell yet because I know China's going to keep buying. I know the government's going to make sure this market bounces back. Then it got up almost 3,000%. And I said, geez, we got to take something off the table. You can't, this thing goes back down, we're all, go crazy. So up 3,000%, up 2,900%. We went ahead and sold half. But then we let it ride. We let the other half ride. So now we knew, hey, we've got an automatic profit. If for some reason this option rolls over and goes to zero, we're still going to have a real nice profit. Well, now, but instead we held it to the end of the day, up almost 8,000%. So for the combined trade, it was up over 5,000%, and it was a great trade for us. And some people stuck with it to the next day, and they said they made over 10,000%, which is absolutely possible given what the thing did the next day. I just can't take credit for that because I got out of our picks there. But these are the types of things. These don't happen every day, but that's the way I use my thinking, my experience. It wasn't just like, hey, we've got a big profit. I'm like, no, I know how China works, and I know there's no way they're going to let us knock down their market. They're going to keep buying it, and so we were able to make this, unbelievably outsized gain on this pick. So and believe me, we have picks, as you see, I showed $800% gain, and Viacom that Rodrigo mentioned earlier, which was last year, where we made 5,000% gain. Again, those big ones don't happen very often, but they happen a lot more. They happen. Still, the several 100% gains happen much more frequently than you might think, and when you can take advantage of them, when you lose 10% on this one or 20% on that one, and it's a small trade, not a big deal. But when you come in and we work our way into the position and then really make big money, it's really it makes It makes for a very profitable year so far this year. Like I said, we're up several 100%.
Yeah, so these are some very interesting trades here, Matt. Let's go ahead and talk a little bit about what's going on right now in the situation. I know that a lot of people were asking about, how they can replicate this strategy and how they can do something similar. Folks, if you want to trade with Matt, the link is there. You can join in the chat, okay? Henry, I hope I can see you there in the chat room. But again, my suggestion is to don't try to wing it, because you're not going to become a genius just by watching this session. That's we're not promising you anything like that. If you trade with Matt, you follow his trades, that's something different. But obviously, don't expect to become Albert Einstein just from a 1 hour session here. Okay. So, Matt, there's a lot of stuff going on here with the Fed. I hear that maybe the meeting in December is going to be the one that maybe rings the bell here. What are you looking for 2023 and for the remaining of this year?
Yeah, I mean, a lot of people, it's funny how one of the things that everybody says, and rightfully so, that gosh, everybody's bearish, so therefore the market has to go higher. Well, everybody's bearish on a longer term basis, and when I talk, I'm talking about 6 to 9 months. Everybody's saying, "Oh, 2023 is going to be a tough year," and yes, so they're all bearish. But almost everybody is bullish on a short term basis. You can't go. We can't open up the Wall Street Journal or listen to CNBC or TD Ameritrade Network or Yahoo Network or Bloomberg TV or Bloomberg Radio without somebody saying, "Yep, we're going to get a rally into the end of the year." Well, we've already gotten a big bounce here. And my question is, once we get past the election, I'm not so sure that it's guaranteed. And so I'm not as bullish as a lot of other people. Number one, because sentiment is too bullish about the end of the year. But number two, they're making a big mistake about what's going to happen for the rest of this year, because the seasonalities aren't as good as they think they are. I'll get back to that in a second. But to answer your question about 2023, it's going to be a rough year and a volatile year, which is going to be great for traders. But the fact of the matter is, the Fed, people say, well, the Fed they're over tightening and inflation, blah blah blah. Okay, fine. But even if we hadn't had inflation, the Fed was going to tighten. Okay. Anybody who doesn't tell you that, anybody on Wall Street says it was only because of inflation, they don't know what they're talking about. The Fed had left interest rates, they took them to zero. Okay. That's not real. That's complete artificial. They're totally artificial. That's not the real world. You don't take interest rates to zero. That's not with the economy, unless you're in a depression. We were not in depression. What we had was the economy shut down for a short period of time. And so they had to make that move. And they flooded the system with liquidity. So they couldn't keep those huge amounts of steroids going in the system. At some point, they had to pull them out. And once they did, whether we had inflation or not, that was going to cause the stock market to come down 15 to 20% anyway. But then we had the war in the war in Ukraine. And of course, inflation went from being a problem to becoming a big problem. And that's why the thing's got to be worse. And my point is that the first leg of the bear market that took place in the first 6 or 7 months of the year, that was just working off the froth that had built up with all those steroids, because the market had gotten to 22 times earnings and 3 times sales. Okay, we've only gotten 2 other times, and both of those when we had massive amounts of liquidity. Without the liquidity, the market had to come back down. But now we have to start pricing in a recession. We're trading at 17 times earnings. That is not pricing in a recession. Every bear market since World War II has gone from overvalued to undervalued. You got to get down to 14 times earnings or even less. That means the S&P is going to eventually have to get down to the 3,000, 3,200 level, and at some point next year. And it's just a matter of it. And people say, the market's already priced it. It hasn't, because what they usually a 20% pullback is enough to make the market cheap. But because it was on steroids and so much higher, it's going to take a lot more for it to become cheap. And let's face it, maybe by some miracle, for the first time ever, at least the first time since World War II, I haven't looked at pre-World War II, but since World War II, the market won't go all the way down to cheap. It'll stop at fairly valued. That still takes you down to 3,200, 3,300. And because I know the earnings are coming down. These earnings last week were horrible. The fact that Apple saved the day at the very end of the week was fine. Google, Amazon, Microsoft, Intel, Texas Instruments, all of them, horrible numbers. And Apple's numbers weren't that great. These are great. Most of those are great companies, but sometimes great companies aren't good stocks because they're too expensive based on their fundamental outlook. And so believe me, I'm not saying that Microsoft's going out of business. And Apple, great company, but they still are expensive. Google, not expensive anymore, but especially as it comes down even more. But my fact of the matter is that we are headed for a recession. Every recession since World War II has saw a decline in earnings. If we have lower earnings next year, that means the stock market has to go lower to price in those realities. So, but going back to what's going to happen the end of this year, and I don't mean to be rambling here, but so many people are looking for a rally. I mean, Mike Wilson, who's a very good analyst at Morgan Stanley, he's their strategist there, and he has been bearish all year and been very right. Now he's calling for a year in rally. Now, I turned bullish at basically the same time, basically right at the same time. I said the market's going to go to 3,800, bounce to 3,800, maybe 3,850, 3,825, and it's bounced more than that. But now he's saying we're at 3,900, and he's saying what could go to 4,000 or 4,100. I'm like, that's only 2 to 3% more. So he's basically admitting that most of it's already in there. And so what do we really? I mean, do you really want to make a big aggressive trade so that we get another 1 or 2% in the overall market? I guess my point is that even he's really saying that most of this rally is over. What I'm saying, though, is that people are making a big mistake when they keep saying the seasonals are really good, because when you're in a bear market, the fourth quarter is actually a bad time for the stock market, not a good time. And there's one guy who comes out to saying every single midterm election has seen a rally between election and the end of the year. 100% accurate. And I'm like, look at 2018, which just happens to be the last time we had a midterm election. And guess what? The market got crushed, down 16%. It did bounce back at the very end of the quarter, but it was still down. So I don't know where these guys, I mean, that's just factually wrong. So we got a lot of volatility in front of us, and we're going to take advantage of it.
And speaking of that, you hear some people on the news saying that, maybe next year we'll go into a recession, that some people are living in denial completely that we are in a perfect state of affairs here, from everything from geopolitics to, to debt, to to all these things. And it's like, you really don't know what you're getting in these, news places, because they just bring on any guy out there, and it's like, people, as a retail trader, that must be the most frustrating thing, where you're just hearing a bunch of different opinions, and you, for starters, have no clue even what they're talking about, right? So where do you think this whole thing lands? Why are there people saying we're not in a recession? Some people are, we are. Other people saying 2023. What's the deal with this stuff?
Well, most of these guys are paid to be bullish, first of all, and that's their job. And one time I was contacted about a strategy job at a very, very, very big firm in New York, and we had our phone call interview, preliminary one, and as we're chatting, he said, well, your job really, it's not so much to be a strategist. We just want to make sure when the market goes down that you convince, that you tell people that, keep their money in the market. And I'm like, what? He says, yeah, it's more of a marketing job, because, and he was right, in that the market over long periods of time do go up. And that's the general thing. And so it's not like he's lying, but I'm like, yeah, but there's certain aspects. I was like, no, I'm in a firm right now, Miller Tabak. You say what you want. If this is what you believe, go ahead and say it. And that's what I do. But people who work at big bulge bracket firms, or even at big money management firms, their job is to keep the money in house and to calm people's nerves. And it's kind of like selling. You may work at a dealership, a car dealership that sells. You know darn well that a Porsche is or some other car is a better car. But that's not where you work. You work at Chevrolet, so you're selling a Chevrolet. You tell them how great the Chevrolet is. That's what you do. They're all in sales. So, and all you have to do is look what happened. Was that 4% of recommendations on Wall Street are sell recommendations? All the rest are either hold or buy. I mean, it tells you that tells it all right there. They're paid to be bullish. So, we just try to tell it like it is. And believe me, this is going to create an unbelievable. I'm not a perma bear by any stretch of the imagination. It's going to create an unbelievable opportunity, whether it be 6 months from now, a year from now, maybe in the first quarter of next year. I don't know. But when it comes, we're going to be there, and we're going to have some money because we've raised cash. Number one, we're also going to have some profits to be put to use. When the next bounce comes along, everybody's going to sell it. They're going to sell at the bottom. Right at the wrong time. And then they're going to sell even more at the first little bounce they finally get. And we're actually going to be adding at that time and taking care of the next great bull market. which this bear market will produce.
Right. The other thing here, I just want to notate really quick, folks. I know that when you were looking at some of the trades from Matt, we're talking about Chinese ETFs, meme stocks. The reason is most people you'll see out there, they're market strategists, but they're just limited to US equities. Matt Maley is covering global equities. That's why he's looking at things that are happening in Japan, in Ukraine, everywhere, in China. And there's ways to profit from all these things. And that's really where the 40 years of experience and knowing what type of instruments to use, that's what's going to help you. Because many of you guys probably never heard of the FXI ETF Chinese thing, or any of these things like wheat, the other trade you made with wheat or with the dollar. So where the volatility is, that's where traders need to be. If you're a trader that your volatility, oh no, I don't want anything to do with it. I'm going to sit on the sidelines for 2 years and wait for the world to be perfect. The real money is made in trading, specifically with the way that Matt trades, because you're not going to make those returns buying and holding or with any type of spread. It's just not mathematically possible. That's why Matt's strategies is the one that will help you get those types of gains that he's showing you.
Well, I mean, not only that, so we're making these gains. So then when the big washout trade happens, like we saw in 2003 and 2009, you not only do you have money to make the great purchases, but you have the confidence to do it, and you back up the truck, and you're buying Amazon at how much, the amount of money people made when they bought Amazon in 2002 at the lows. Oh my God! In the next 10 years, that's what we want to be able to do. And as I said, the way that Warren Buffett became a billionaire, wasn't by buying expensive stocks and watching them go a lot higher. When there was blood in the streets, he bought and held on for a long time, and that's what we're going to do when this bear market comes to an end. But that's going to be a while from now, and we're going to take advantage of that volatility. And that's all the greatest hedge fund managers. That's why you sit there and we use all the tools. We use technical analysis. There's so many people. You hear, geez, technical analysis, bunch of lines, and I'm like, every great hedge fund manager who ever traded uses technical analysis and uses it in a major way. Okay, I'm not saying it's what all they use by any stretch of the imagination. I'm not saying that at all, but it is something that they use. So again, because it helps you with the timing of some of these things. And we see you can't time the market perfectly. We can't time it perfectly, but like I said, we can get those. So many of those people on Wall Street, they just want to catch the 70% in the middle, and that's fine when the market's going up every year. It doesn't go up every year because, like I said, that those guys who got 70%, all right, the Morgan Stanleys and the Goldman Sachs, they got 70% of the oil rally in 2021. Okay, but because I got at the bottom, we made 120%, more than double. 50% is good, 120% is a lot better. So that's, I guess, the point of the matter is that if you that's where the big money is made. When the markets when the markets are seeing these big swings, and the chicken, I won't use the chicken SH, people who are just trying to get that easy stuff in the middle. That's fine. And that's what you want in your long-term portfolio. You want more than one bucket. You don't want to be 100% of your savings in the trading bucket, but if you have, and for some people, my father was a businessman. He wasn't in finance, and he put his money in that was long-term. That's fine. He didn't have the inclination. He wasn't not interested in trading. That's fine. And there's nothing wrong with that. But if you do, and you want to have that bucket, it can be small, big, whatever you want to be, you can take advantage of it. And we have the tools right now. Again, if you're somebody who says, geez, I can look at this 2 or 3 times a month, that's probably not what you want to do. If you're somebody who but you don't have to look at it from 9:30 in the morning when the market opens till 4 o'clock when the market closes 100% of the time. But you can do it. You can be active. But I think you need a team to work with, and that's what we have in the chat room. And trying to do it alone, like I said, the guys at Goldman Sachs who are making big money and they're very good at what they do, they ain't trading alone. They're sitting there with an army of traders on their desk, and they're talking to them all day long.
Right. And Stephen asking, so for those on a tighter budget, what type of options can access this information? Stephen, the calls and puts that we're buying in the chat room, they're probably like $1 average, you'd say, Matt, like in that
Yeah.
range. They're
Yeah,
not
sometimes, yeah, I would say even less, slightly
80
less,
cents.
because I try to do it. I mean, there are times when, and we're looking for the big moves. We're not looking for, we do out of the money a little bit, not way out of the money, just a little bit out of the money because we're looking for that big move. But again, so it don't cost you $1 to buy the thing. And so you're not paying, I mean, people were asking me a couple, 6-8 months ago, what about, Tesla puts or calls, and I'm like going, well, it's fine, but the stock's a $2,000 stock and the options cost a freaking fortune. Now they've split, and so those things have become much more attractive. So and the same thing today. I mean, we're looking at maybe we'll have to see what happens tomorrow, but we're looking at some potential put options in some of the bank stocks. Well, just look at this very simply right here. You can see on my Bloomberg machine. This is J.P. Morgan. Okay, J.P. Morgan. JPM is the symbol. Okay, here's the stock. We'll just look at the stock. What I'm going to show you here is, see how this thing, remember we talked about that RSI, how it's getting overbought? So this stock might be getting ripe for a pullback here. So do we want to buy the puts? Okay, let's go look at the put options. I'll show you that here. Hold on. Oops. Okay. Let's see the puts. Okay. Well, it's it's $128 stock. So if you want to buy the puts at $125 puts, it's 50. What's it? Well, again, these are 58 cents. Okay, so okay, 58 cents, great. But what if you want to buy the ones that just right in real just slightly out of the money? Okay, that's $127 put. That's 100. It's going to cost me over $1. Well, what about Bank America? Bank America, it's a $36 stock. It's a lot cheaper. I mean, it's not mainly cheap in terms of valuation because it's not shares. But see, same thing. Its RSI chart is overbought. Okay, but let's look at the options. Remember those things cost $1.18? Okay, well, guess what? The $36 calls, okay, 43 cents. Now, on a percentage basis, don't get me wrong. If they see same percentage moves, you're going to make about the same money. But here you can go in and say, hey, I can buy several of these options where maybe they're just easier to buy. They're cheaper to buy. I can buy more of them. And I like to do that because you like to be able to sell half. If something goes up 100%,
it's easier to manage.
Sell half,
yeah.
You've covered everything. And if you only have one option, it's just harder to pick that exact spot. Where am I going to sell it? Oh gosh, I should have sold it there. Oh, I wish I did. Yeah. And it's like, okay, I've sold 2. Now I'm already got a profit. Even if the rest of my options go to 0, I've still got a profit. I feel comfortable. Now I can let it ride a little bit. So again, these are the type of risk management things that we try to work in, because it's always, if you can, always better to buy several options so you can trade around them a little bit and not try to, drive yourself nuts trying to figure out the perfect place to sell it. You can sell part of it and let the rest ride.
Right, absolutely. And so I know you're going, you see a lot of data, right? You read a lot, you're looking at markets, all this stuff. What's on Matt Maley's mind? What are you thinking? Like what is going through your mind? And where do you see this week going with all this?
Well, I got to tell you, I've certainly been fighting, I say fighting, but and people in the chat room are really think that the market is going to be, and it's funny, they did change their minds a little bit today, but people really think, well, the Fed's going to, say not pivot, but the Fed is going to announce that they're not going to raise interest rates quite as aggressively, and therefore the market's going to rally to the end of the year. And that's what a lot of pundits, even some bearish pundits like Mike Wilson on the street, are looking for this big moves. But I am not sure. Number one, the Fed has come out and they've hinted, yes, they're going to slow down. But history shows that the Fed, it's not when the Fed starts slowing down their rate hikes that the market bottoms. It's when they stop hiking rates. And everybody knows that's not going to be until at least next year. So even if they go from, they're not pivoting. In 2018, they pivoted. They went from raising rates to immediately cutting them. Okay, they completely pivoted. That's what a pivot is. Now people were talking about them pausing. Well, pausing means stop. Well, they're not going to stop. They're going to do 75 basis points tomorrow and then probably 50 in December. They're not stopping. They're going to continue to raise rates. And so that's not a stop. Okay, and pausing is not a pivot. And besides, the market has already rallied 12%. So they priced that potential pause or semi-pause. So I guess my point is, all they're really doing is shrinking the size of the increases. They're not pausing, and they're definitely not pivoting. Okay, So that's my big concern for me. Also, and we've heard it. There's this guy. I can't pronounce his name, but I should be able to easily. But he works for the Wall Street Journal. They call him the Fed Whisperer because the Fed leaks stuff to him every once in a while, so that they get their narrative out there in the system. It's I'm not any conspiracy thing here. Everybody everybody knows that that's what they do. They leak the stuff. They leak the stuff to him when they're in their quiet period, because 10 days leading into their meetings, they're not allowed to speak publicly when they're about to announce a rate hike or rate cut or anything like that. And so if they need to change the narrative in the street, they go to him and he tells it. Well, guess what? He was one of the ones who was saying late last week that, hey, the Fed's probably just going to do 50 basis points. But again, the markets rallied, started to price that in. But he also said, and he repeated it today, is that, the Fed doesn't want a great big rally like they had this summer, because that just makes their job of tightening it. They still want to keep a tight monetary policy. So if the stock market rallies and everybody feels joyous again, they're going to spend, and then we got inflation's a big problem. A higher stock market, I hate to say it, but a higher stock market works against what they're trying to accomplish by getting inflation down. So I believe that we'll see some things going. But again, we want to take advantage of these things, and that's why I looked at where we're going to be looking at some of these in the chat room. Well, if you join, love to have you, and you'll find out tomorrow. We'll be doing some trades in the Apple computers of the world, in some of these bank stocks, and even maybe a Google, which is really getting washed out, Amazon, which is getting washed out. The action in Amazon and Google today was quite negative for the broad market, but not necessarily for the stocks. The stocks are getting oversold. Are we going to buy some calls on those? We might. We'll see. We also, as Rodrigo said, we do some, other than just straight puts and straight calls. We don't do the iron condors and all these things. But what we try to keep it simple, stupid. Keep it simple, stupid, right? And but we do sometimes some strangles or some straddles. And what we do is like if right now I'm kind of bearish, so I'm bearish, and this rally into the market. What I'm going to do is buy some index puts that expire on Friday. We already own some, but I will hedge them with some calls. I was like, well, what are you talking about? I was like, well, that's really good. It's like, well, okay, wait a minute. So in one account you bought Apple, and your other account you sold it. You shorted Apple. What good is that? I mean, if it goes up 3 points, you'll make 3 points on your long, and you'll lose 3 points on your short. You don't make any money on that. That's different though, because if you buy the options and you see a big move, the options are going to go up 200% on one, and the other one's going to go down 50% or 20%. Right? So you're going to make way more. And so what we do is a straddle, which when you go in and you buy, it's an option, both a call and a put on the same stock or ETF with the same expiration date, but with a different strike price. And a straddle is when you go the same strike price. But my point is, you're looking for volatility to move in a big way that you'll make way more in your winner than you'll lose in your loser. And of course, if the market does nothing, you lose on both. So there's no guarantees. But in today's volatility, it's worked very well. So we're going to be looking at some straddles tomorrow, index straddles, some individual stock straddles, and luckily, a lot of times we'll do that like today, because we knew that Advanced Micro Devices was going to announce after the close. We had to do it today during trading, because tomorrow. And then sometimes we'll do it for a stock that's about to announce earnings the next morning, because we know that even though the earnings don't come out till the next day, they will come out before the opening. So if we want to take advantage of it, we have to trade the previous day. With this situation with the Fed, we don't have to, because the market's actually going to open, it'll open 9:30, and we'll be trading for several hours until that 2 o'clock announcement comes in, so we can play with that tomorrow. That's why we held off on some of our bigger trades. So that's what we're going to be doing tomorrow. We also look at some things in the bond market, the TLT, maybe even in the dollar as well. But there's going to be a lot of stuff, because some stocks have become very overbought on a near-term basis, and some are quite oversold. And that's when you get the biggest bang for your buck, when you really get the big bounces on the oversold stocks and big sell-offs on the overbought stocks.
Yeah, and I just want to point out here really quick, folks, when Matt and I launched this chat room, which was last year, and when it was just me and Matt, before that, I had already been following Matt on his recommendations, and I'd seen him in other places out there, and I've noticed that he's always taking care of his folks. Like, for example, when he was seeing a correction come in, he would tell like all his members, hey folks, I think we might have a correction. Make sure to lighten up on stocks so that we can make money on the way down and buy some high quality names. And he's been right on every single correction. But more importantly, folks, know that I'm a trader here. I'm not a journalist. I'm not like any of these people you see on CNBC or Bloomberg. I'm a retail trader myself. I'm here with Benzinga. My goal here is to help you guys make money in the markets. And personally, I can tell you, I've done pretty well with Matt's chat room, and I'm not there every day because I'm slammed here with work. But whenever there's volatility, when there's a Fed meeting, whenever there's something going on, on either side, I don't make a move if I don't go and see what Matt is doing, because it's happened to me twice that I make a trade and I go see that Matt has the opposite trade and I've lost twice. And my recommendation is to never bet against Matt Maley. It's never going to work out, and I'm talking from experience.
Well, it's like anything else. Not all of our trades, not every single one of our trades work, but the whole thing though too is it's like, this is my thinking, and accept it or not accept it. I mean, it's like, something, Matt, I hear what you're saying, but I disagree. And believe me, we had one. Well, actually, one where I agreed with the person. I was buying Amazon. Tammy, she came in and she's like, Amazon, they're about to split. This is a couple months ago. They're about to split. Every time they split, the stock goes way up. We should look at the calls. And I'm like, wow, that's a great idea. And I went through some of my own work, to back up what she had said. I said, Tammy, you're absolutely right. I'm not going to do it, but you go ahead. Why? I agree with everything she said, and I didn't pull the trigger. She made 2,500%. I made 0. So it's like I wasn't wrong. I was wrong in not acting. I didn't say no, you're wrong. Don't do that. I just said, go ahead and do it. I'm not going to do it. But the point is, you obviously but it's just like, it's not blind. I tell you why I'm doing something. Not just like, hey, guess what? I heard from the guy that maybe there's going to be a takeover. we got a real reason here, and again, they don't all work. When they don't work, we get out of them and move on. But there are plenty of people who do trades that I don't suggest.
They do pretty well,
and then don't act on trades that I suggest. But we do. But again, if I tell you I don't think you should do it, I give you a reason. Not like, hey, you're a dope, don't do it. I say, no, this is why. And yeah.
And really quick here, and like that's Tammy. But then I know there might be a couple Tiffany's, but there's one Tiff that shorted Target, made like 4,000%, then shorted Ross. And there's this other, I remember this other trade about Snapchat. I don't know if you remember that one.
Oh yeah.
There were so like, it's like you have an army of mini Matt Maleys there that,
that was another, I shut my eyes there because that was another one I didn't do that they freaking killed it on, and I missed it. Even though I told them, hey, that looks like a good idea, but I'm doing something else. I'm not going to do that one.
Yeah. So really quick here. So we're getting a lot of questions here about the live room. I just want to get this out of the way because we're going to keep talking about trade ideas, options, education. And if you got some, anything you want to talk about, put it in the chat. And now we're going to go through these questions quick, folks. Again, thanks a lot for sending these. Phil, does everybody that joined get a free laptop? Yes. Everybody that joins will get a free laptop. 100%. Yes. Are the sessions on Tuesdays recorded? Yes. We didn't talk about that a lot, but Matt has a session. We'll talk about it out in a few minutes. Matt Maley has a session on Tuesdays. It's only for the chat members. It's from like 11:30 till about 12:30. It started as a 5-10 minute market update, and now it's like a whole market update for the week. What is the chat room schedule? Okay, chat room schedule. Matt is there Monday to Friday, 9 to 5, but the chat room itself is open 24/7 because we do have an international community from people from all over the world. It never closes. You can be there anytime. Is there a money back guarantee? Yes, 30-day money back guarantee. Price at renewal will be the same as today, 70% off. It's not going to change on you. We're not going to pull the Comcast move. Okay, it was required to trade in the chat room. We kind of touched on this already. These contracts are like $1 or less. David's asking, can Canadians sign up? Yes, we love Canadians. We love people from all over the world. You can join. Everybody can join. I've signed up people from everywhere from Africa to Finland to Australia, every corner of the world. Matt Maley, if you don't know, he's on CNBC Asia and Bloomberg Asia, so he's famous in China too. Okay, so Matt, talk to us a little bit about the Tuesday session because I know that's been evolving, and now you're doing education there too. And give us the loop on that.
Yeah, we do it. It's kind of like this. We go, as Rodrigo said, yeah, okay, we'll do something for 15 minutes. Give people a little update. And it just has turned into I usually start off by just going over whatever topics that, whether topics I deem important, but also people say, hey, on a Thursday, hey, next, this is not important right this very second, but hey, could you touch on this in next Tuesday's Zoom meeting? And so we'll do that. Today we talked about obviously the Fed, what we thought was going on with the Fed, and then literally I had a list here. It says we talked about Apple Computer, Google, Bank of America, JP Morgan, Wells Fargo, the XLE, Amazon, Advanced Micro Devices, United Healthcare, and Taiwan Semiconductor. Usually you don't go with that many stocks, but people were, and finally there was a couple others. I ran out of time, but after 1 hour you start to lose people. But it's just we use it for a number of different things. Today it happened to be, hey, obviously the Fed's tomorrow. Let's go over that. There's a lot of different stocks that could see big moves after this Fed meeting. Let's talk about all of them. Sometimes is we talk about two stocks, and we spent half an hour talking about how a head and shoulders pattern really works, or how these are certain triangles, the difference between an ascending triangle, a descending triangle, and a symmetrical triangle in technical analysis. Sometimes we're talking about certain what do you call it, correlations. People think that there's a certain correlation that makes sense, and that it actually doesn't make sense. It doesn't work. People say that well, oil prices are going down. That must be good for airline stocks. Yes, usually, but frequently. In other words, not. It's I would say maybe 70% of the time it works, maybe 60%. There's another 40% of the time it doesn't work at all, and we go over those reasons why that. So again, talk about the whole point is that we talked about the educational aspect of the chat room, which we really tried to highlight, because in these Zoom sessions that we do on Tuesdays, but also when we're talking about a trade and why I want to do a trade, or why I don't want to do a trade. Somebody's asking me, hey, what do you think about this trade? And there was one today talking about Google, saying, geez, I think maybe this stock, should I just get out of it? And I said, and I'll just show you right here. And this was the person owns some long-term call options, and they have a loss, and I'm like, it wasn't something I'd suggested they buy, but they had a loss, and I said, can this thing bounce back? The stock is flat on its back. It's been acting really poorly, but look at this. I went all the way back 2006. No, it doesn't. Oops. Okay. Now look at this. Remember, this is the weekly chart. Okay. Bang. Now I'm going to go to the weekly chart. I'm going to get rid of these. Oops. Moving averages. Sorry to get all this stuff. Now the stock is not wildly oversold, but it's getting oversold. But look at this here. Look how it's getting right down just slightly below its 200-week moving average. I know this is kind of hard to see there, but you can see that's where it got down, just below it during the pandemic. You have to go back to the depths of the great financial crisis to find any time it traded below its 200-week moving average. Okay, bang. Now you can see a little bit of it. See, it got down and tested it a bunch of times in 2011, 2012, et cetera, but never got below it. I shouldn't say it, it got slightly below it. That's why I always want to say, if you break a support level by a small amount, that doesn't mean anything. You always want to see a material break, 2 or 3% below that thing. And of course, the same on the upside. You want to see something break above, if it's just 2 or 3 pennies, or even 0.5%, that's not enough. You want to see a material break. And that's what happened here. Got below here, that 200-week moving average, and then look at rallied straight up. So you want to really be selling this right now? I said, something, you may still sell it at a loss, but I think there's a good chance that sometime in the next week or two, this thing's going to bounce back, and you may still sell at a loss, but it's going to be a much smaller loss than you will if you sell it today. You don't want to sell stock, especially if you've held it for a while, and now it's flat on its back after a big decline. That's what happens. The people just finally say they throw in the towel, and that's usually the bottom. So again, this was one of these situations where I just said, educationally, let's look at this. It's a 200-week moving average. Different stocks have different things. That's why you have to backdate everything. For some stocks, the 200-week moving average isn't that important. It is for most stocks, don't get me wrong. And it certainly is for this one. So that's why I was suggesting, and I like Google on a longer term basis. It acts really poorly right now, but I'm saying, geez, if you own options that go out if you have options that are going to expire on Friday, I would say get out. But options that go wait many months, go ahead and hold on to them for a little while longer. This thing's going to bounce. You're probably able to sell them at a better price. But again, these are the type of the things that we didn't talk about this in the in the Zoom call. We just talked about it in the chat room, and I posted that chart.
Matt, let me ask you something here really quick. So I don't know if are familiar with Bob Sloan. He's from S3 Partners. Basically, he was one of the first ones that was talking about, GameStop and all that stuff. He recently went on Yahoo Finance, started talking about, that Facebook was like the second position highest held by hedge funds, and that there's a lot of pain just by market structure that could cause a certain squeeze on GameStop if it goes up. What are your thoughts on this whole stuff? Because his approach was market structure, kind of like where you remember when GameStop was going up and then hedge funds had to sell at their apples or something like that. That GameStop was kind of like the indicator. What are your thoughts on all that stuff and the meme stocks and if this can happen?
Well, yeah, I don't know if they're the indicator they used to be. I mean, the whole point was that the reason why it was so important is there was so much liquidity sloshing around the system because the Fed had kept the liquidity spigots wide open during the post-pandemic in order to save the system. They did the right thing to start. They just kept it going too long. Excuse me. They kept it going too long, and that allowed they had all this money sloshing around, and people just went into these different into these different plays like GameStop and AMC and such, and that liquidity is disappearing. So I don't see that because the liquidity. I mean, there's a big reason why Bitcoin is done nothing for a while. I mean, I think Bitcoin there will be a couple of cryptocurrencies that do very, very well. The problem is that because we had all this liquidity sloshing around and no place to go, it just followed these crazy things that were moving. That's why Bitcoin came down. And that's why it's doing nothing right now. It'll bounce back eventually, whether maybe from a lower level. But it was the liquidity play. That's what those meme stocks were doing.
Right.
They were liquidity plays, not fundamental plays. I don't see them making a big comeback personally.
Right. No, absolutely. So let's look at the big picture, because I know you're in your head, you have thousands of tickers and stocks and different industries. But let's just say if you were to pick one stock that has been hit the hardest unfairly by this crash, correction, whatever you want to call it, that would be one that you would be looking forward to slowly, adding here and there. Could be anything from Freeport or Facebook. Like, which do you think is the stock that really most unfairly and that will have a slow, steady recovery in the future?
Well, I think the one I have up right here is Google. And you look at it here now, Meta, which is the old Facebook, of course, is also very cheap, but I don't know what the heck Zuckerberg's doing, but I get a little worried about that guy. But hold on a second, I just want to show you something. Yes, okay. This tells you what. Whoops. Okay. See, it's trading at 17 times, 18 times earnings. Okay, it's only been cheaper twice. Now, for a lot of companies, 18 times earnings is not wildly expensive, but for Google or Alphabet, that's cheap. It was actually technically 3 times, but during the Great Financial Crisis, and I'm sorry, take it back. The only time that was this cheap was not during it was in 2011, 2012. That was the European crisis, and then at the depths of the 2020, when everything was just was basically shutting down. Okay, that's the only, and it wasn't that much cheaper. So if you start nibbling on this stock here, and I've been saying this for a couple of weeks now, and it has gone lower. And I'm saying it's probably going to go lower, and that's what I said at the time. Could it go lower from here? Yeah, it could still go lower, and it probably will, but that's okay. What you want to be doing is nibbling on that. We call it dollar cost averaging, and you buy it every month, 15th of the month, 10th of the month, I don't know, one day a month, and put a little bit of money into it. And every month, and believe me, your average price this time next year is going to be a good one, and 3 years from now, it's going to be you're going to be so happy that you did it. It would be like starting to buy Apple computer in the summer of 2008. Did it go lower? Yeah, but okay, let's see here. Let's do the math. Let's do a picture's worth 1,000 words. Let's see.
Yeah, and just for the folks that are here, even though we're talking about options and things like that, like Matt is probably the most qualified person you'll talk to ask him about stocks. So you can totally ask him about stocks, long holds, that sort of stuff.
So look what happened here. If you bought Apple in here in September of 2008 and just started nibbling on it, it went lower. It's hard to see, but it went lower. but your average price would have been pretty good, right? And then guess what? 10 years later, forget about, okay, boom, right in here. So your average price is right in there. Okay, forget about the big rally lately. Hello, thank you. Up 1,600% in the common stock. And if you obviously if you owned it to here, you made whatever, it's a 6,000%. Okay, that's what we're looking to do. But you sit there and say, well, what about Apple now? Well, okay, I'm gonna show it to you here. Hold on. And you think, okay, I'm gonna go back 2005. And we're going to look at, this is the price, but now we're going to look at the, whoops, is it back to, what happened? Come on, 2005, let's go. There we go, sorry. That's the price, but let's look at the price earnings ratio. There it is. Look at the price earnings ratio. This is it, okay? It's still at 24 times earnings. You can see that during this bubble, it was really high. During this bubble, it was really high. I would go back to, I can show you back to 2000. But see, when there's not a huge amount of liquidity, huge QE programs, it's below 20. Its PE is below 20. So you'd think that 24 is probably not a crazy PE ratio, price earnings ratio for Apple. It actually is expensive. It's a lot less expensive than it was, but it's not crazy cheap. And again, I'm not saying, oh, Apple's not a good company. Not at all. I'm just saying that, and we'll go back to what we said here again on Google or Alphabet. Hold on a second. Let's do the same practice here. Look at this, GP. Okay. And then we'll go back to, obviously they went public later. Apple's been around forever. But oops. Okay. That was it. That was it. 1998. Okay. I can only take 2 more seconds. I don't hate to have dead air, but what's going on with this? Come on, baby. Well, anyway, I'll just go to price earnings anyway.
Pull out the good old calculator there, Matt, like the good old days.
Yeah, there we go. But see this? See this 17 times earnings? Okay, let's see if we can go. Yeah, there's 1990. Oh, 1998. Let's see if I can try one more time. See if it goes. Okay, but it doesn't really matter. But you can see here, and let's even zoom it in so we can see it better. Let's see, bang. Here we go. Here we go. Okay, 2008 at the worst case of the recession, right? 2011 and 2012, that was the European crisis. Remember, Greece was about to go belly up and default on all their debt. Okay, and then at the depths of the recession, and these 2 years. Look at this, at the depths of the pandemic, when the economy was slowing down to zero, we're way cheaper than it was at that point. So are you really, what kind of a risk are you taking on long term? Again, should we back up, load up and buy the calls? I don't know. I don't know that it's going to bounce back that quickly because the stock acts poorly in terms of on a short-term, intermediate-term basis. But look, I mean, I'm telling you, look what you did if you bought this thing here. What did you do if you bought this thing in 2000? During the crisis, you just bought it every month. So your average was somewhere in here, right? Your average was somewhere in here. And does anybody really think Google's going to is going out of business? I think we can all agree on that. It ain't going out of business. Okay, this is not one of those .com companies. It's about to go out of business. So you get the average price in here somewhere, and guess what? You're up 90. In a couple of years, you're doubling your money. And that's just in a regular stock. Forget about any long-term options. Okay, so these are the types of things that I'm looking at now. Why not be buying a Google let's say I want to put $1,000. I want to put $500. I want to put in $10,000. Divide it by 12 and buy it every month, or 9. Let's say buy it over the next 9 months. Divide by that number by 9 every month. I'm going to pick a date. I'm going to pick the 15th or the closest date of the 15th. Obviously the 15th comes on a Saturday. You'll buy it on the 14th, whatever. I'm going to buy it every single day for that month. And guess what? We're all sitting pretty. And again, you'll be sitting at the end of the year. You'll be like, geez, I wish I had bought it all the bottom. Of course you do. And that's why in the chat room, believe me, I've been doing this long enough. We're going to be able to back up the truck a little bit when thing gets ridiculously oversold. And then we're going to say, okay, we bought a little bit every month, but now we're going to get more aggressive, buy even more here. And then again, a better average price. And then, you again, most of the time I don't dollar cost average, but that's what you want to do when good companies get cheap in a bear market.
Right. So And look, I mean, we've been here for quite some time since 5:30. I think maybe it's time that we can get a little feedback as far as like maybe what people here want us to go over, maybe, or go over some trade ideas. Matt, is there anything in particular that you would like to cover before we go over a couple stocks here from the chat members?
Well, we have here the well, let's see. So if everybody want to, ask Rodrigo, give him some tickers, and I'll talk about Tesla. Obviously it's been in the news all over the place. But let's go. I mean, what's going to happen with this? I am concerned because I'm worried about he's going to have to spend too much time focused on Twitter. Why he did that, I'll never really know. But he overpaid, and believe me, there's some people who you just sit there and say, what was that guy thinking? This guy, is kind of hard to argue with his success, right? He is a brilliant man, and but what I'm worried about right here on a technical basis. Let's look at this. This is what's called, again, we're trying to do these things. It's what's called a descending triangle pattern. Okay, bang, bang, bang. Boom. Do you see how that is? See, and so if this thing breaks below 200, I drew that line should be lower. I just drew it a little too high. But at just about 200, it breaks below 200. That's the bottom end of that trading pattern. That is not going to be good. I worry that we're going to break below that number at some point in the next few months. It may not happen immediately, but it's worked out. See how it got ridiculously oversold? The bounce back has been pretty feeble, and it's no longer oversold. It's not overbought, but it's no longer oversold. And we need to be careful about. Let me see. Oops. Let me do it again here. Hold on, it'll take me a second here. Pull it back up. But I'm getting a little worried about this. It's worked off this oversold condition. And you see how it didn't get the golden cross. You know what a golden cross is? A golden cross is when the 50-day moving average breaks above the 200-day moving average. Well, it failed, right? See, it failed there. It did see a positive MACD cross. That's another thing there, but it just seems to be running out of gas. And I'm not ready to buy puts in it. I'm not ready to make negative bets in it. But the bounce has not been a very good one, and it's going to be tough for him to concentrate on what he's doing. And plus, the biggest thing on the oh, look at the cat, that's cute. On the fundamental side is that they hinted towards, what they basically said, that they're seeing slowdown in demand in China. That's a big concern for me. I'm not calling for the company's going to go out of business or anything like that. And a lot of people were saying. How many years ago, or a year ago, not even a year ago, year and a half ago, it's not going to make it. It's going to go out of business. Not saying that. I'm just saying that they do face fundamental issues. We saw what's happening with General Motors and Ford. Their demand is way down. If we're seeing demand in China being down, that's not good for them. Not saying the stock's going to zero. Not saying it's going to get crushed. But if it breaks below 200, with this one guy, Tony Sakanaki. And Bernstein, a very, very good analyst, and he thinks the stock could go to 170. I think there's a good chance it'll happen. May not happen overnight, may not happen until next year, but I do think that that's a possibility. So anyway, so that's what I'm thinking on Tesla right now. Near term, I'm kind of stuck between it. There's other stocks that I are more compelling turning points. And Tesla may be at one very, very soon. It's just not quite there yet. We'll just have to see. But anyway, so if there's some other tickers that you want me to talk about, we got another about 5 minutes or so, and we'll wrap things up.
Okay, so really quick, Steve asking about how many trades a week do you recommend? I mean, it really depends on the volatility of the markets, right? I mean, sometimes you could buy put the same day, the next day you sell it for so much, and maybe you buy calls for the move higher. It's really hard to say, Matt, but like, what would you say for that per week? I'd say, man, at least 10 a week.
At least. I mean, again, so far this week it's been light, but that's only because because today was such a quiet day with the market kind of trading in a sideways range, and even yesterday, I did some trades on Monday, but I'm sorry, take it back. Today's Tuesday. I was thinking today's Wednesday. So it's been 2 days this week, relatively quiet, but I guarantee you, 10. I'd say 10 trades would be a light week.
Really light week. Okay, so then we have Ilusha asking about N-phase. I think that's EMPH.
EMPH. Okay. Up here. Okay, I like, as I've said, I like the energy sector. I remember I turned bearish in June for a short time. I actually did turn bearish again. I say bearish so much, but I said I actually have turned bearish, but not in an aggressive way. And the tier 2 picks, I'm not ERY. But see this stock here, how this didn't quite give us an outside day. But again, going back to there's a couple things going on here. See how it's overbought? See that RSI getting overbought? Not a big deal. I think it wants to break to a higher high. I think it's going to get there, but it needs to work off this overbought condition before it pulls back. See how it really tried to run up today? I don't know if you can see that, but let me tighten it up a little bit. We can see. And let me get rid of some of these lines. These those colored lines are the moving averages. But you see how it's making a nice higher low. That's good. The next move is a higher high. That's going to be really good. But again, it's because it's overbought near term. It may have to pull back a little bit. So I like it. I just don't want to get too aggressive on it now. If you own it, I would definitely hold on to it. I would not short it. I would not buy puts in it. But I do think it'll be take a breather, trade sideways, maybe a little lower over the near term. See what happens. And then we take another look at it. The stock gets down into the down below 290, especially. That could be a place where it gathers around 290 or so, even a little above that. It gathers itself for another nice run.
All right, let's see what else we got here. And then we have Lori with MDB. That's Mongo. So that's the medical company. There's a lot of interesting healthcare companies, Matt. What do you think about healthcare overall?
Well, I think it's a big. It tends to be a defensive play, and what you like in these recessionary times. It's a little bit tougher for the some of the biotechs because you just don't know how they got to come up with the good drugs. But for healthcare overall, it's a good play. And look what's happening here. See this thing? It's how it's over. It had gotten oversold, but it's trading in this sideways range. Let's look at the weekly chart real quick. Yeah, see, it's not crazy oversold, but it's it's down there. But I'm going to go back to the daily, and I'm going to just show you something. The one thing, you're trading in a sideways range like this, after a sell-off, it hasn't bounced back, but it's stabilized quite nicely. So, I mean, whenever a stock gets stuck in a range for a while, you want to see which way it breaks out of that range. So I'm going to stay neutral on this stock right here. I like the fact that if you want to buy a little bit, fine. But if it can break out of that sideways range above $200, that's when you start looking at it. But I like the fact that it's been able to make a nice base. I don't. Hold on a second. I just want to see what I doubt they pay a dividend, but I just want to. Yeah, they don't pay a dividend, which is fine. It's just it's a the thing about it though. It's basically a software company, right? So they're in. Wait a minute here. Okay. I'm sorry. Okay, hold on a second here. For some reason I thought. Okay, no, it's not. It has nothing to do with the. I'm sorry, I don't know why I thought it was software. Why I thought it was a healthcare company. Okay, well, obviously you can tell I don't know that much about the company, but on the technical basis, I just think you want to. It's building a nice base. That's good. But you want to see it when it trades in a sideways range. It can stay that way for and just be dead money. It could go months. So you want to wait and see which way it takes out of that range. And if it can break above 200, that would be bullish.
Okay, all right. Let's see. Paul asking, what platform is Matt using? That's a Bloomberg terminal. It's not included in the deal, obviously. But if Matt sees anything there, interesting, trust me, he'll let you guys know. Matt's a team player, and that's what we do here. We all help each other out.
3,000. It's $3,500 a month, so it's not very
right. Let's see. All right, Paul. I think we talked about Amazon already, I believe.
well, look at,
no, yeah. All right.
Just the thing about it, I'll go real quick, is that on a near-term basis, I mean, they announced that the whole thing in their web services, basically their cloud. That's not good. But look at this. They got crushed. I mean, let's look at this stuff. Let's get rid of these things. Look how this stock got crushed. Okay. We all know what happened. They reported lousy earnings. And they talked about how their there it is. Okay. Oops, sorry. They talked about how they're, the cloud. Everybody said cloud. Oh, don't have to worry about cloud. They'll always make a zillion out of the cloud. Will never go down. Well, guess what? The cloud business disappointed. So here's a stock that's absolutely crushed. It was down 20%. Amazon. This is not, now this is a well-established company. For a well-established company to go down 20% one day, it's amazing. Okay, it's not a meme stock. It's not a brand new tech stock. It's been around forever. Goes down 20%, bounces by the end of the day, but still closes down 10%. Does nothing the next day. Today we make a new low. That's horrible. That is horrible action. Having said that, it's getting oversold. So if we get a bounce soon, but I guess my point is I'm very worried about what this means for the overall market as we get on the months out. Can it, but because it's getting oversold and it's RSI, it could bounce at any time. But today's action was not good. I mean, really not good.
Yeah, and the good thing is that it does not matter what the market does. You'll make money either way if it goes up or down.
Absolutely.
And that's the thing that I love the most about your chat room, that you're really not like a perma bull or a perma bear. You're really unbiased and just agnostic to the fact that it could go up, it could go down. We have to be prepared for either or, because we're trying to trade the volatility, right? It's not just the volatility one way. Okay, let's see. Then we have Pramod, and this is going to be an interesting one. Freeport McMoran. I know all these CNBC guys talk about it all the time.
Oh yeah. Well, still, and rightfully so. Hold on a second. The old name for Freeport McMoran was Freeport McMoran Copper and Gold. CX. And so you can see how it has a several. What the heck's wrong with this? Hold on one second. There we go. What happened to my? Okay, there it is. Okay. Sorry about that. FCX. What's wrong with my? Okay, let me just try to scan. Okay. Okay, there we go. Sorry about that. My screen just kind of froze up a little bit. But remember we talked about. Here's a stock that's been trading on. It's been trading in this sideways range, a much wider range, but it's trying to break out. Okay, and so this is starting to look enticing. Let's get a couple things I'm going to look at here. There's also an article today in the Financial Times about how copper is going to be. There's going to be a scarcity of copper this winter, and therefore copper prices can go up. And again, it's free. Everybody thinks about this as a gold mining company. Well, it's copper, and it's free. As like I said, the old name was copper and gold, not just gold. But here, bang, bang. Let's see if I can get this right. Hold on. Okay. See how it's been in the sideways range? Let me get that stuff out of the way. See, I've been in the sideways range. And again, we need to get it above that. It got there today and pulled back. It breaks above this. This is going to go. And again, we're looking at the technicals. Okay, bang, already well above its trend line. Okay, trend line going back to last April. But it's only broken above it because it's gone sideways. You'd rather see it break out. But if it breaks above that level, we'll have a broken out of the negative trend. The downward trend. It's already broken out of the downward trend. And then if it can establish an upward trend, that's going to be really bullish. Now let's look at copper. Copper, which has been beaten up had been beaten up over the summer. Again, trading a sideways range. If the Financial Times of London is right, and that's going to be positive there. And then of course let's look at gold, the commodity in gold. And gold, that's not really breaking out. What we want to see is it break above that 50. That yellow line is the 50-day moving average in gold. And everybody's saying, what happened to gold being the great hedge for inflation? Well, it hasn't worked this year at all. But see how it got right up to its 50-day moving average, slightly above it, right up to it, slightly above it, right up to it. If it ever breaks out above that thing, those algos are going to kick in and gold is going to take off, and so is FCX.
Interesting there. All right, let's see. We have, and folks, by the way, just so you know, once we wrap up here with Matt, I'm going to give you guys a sneak peek of Matt's Inner Circle chat room. I'm going to show you the trades, all that stuff, so you can get a sense. Also, for all the people that just joined, I'll give you guys a walkthrough, so make sure you stay here. If everybody else wants to stay and look at Matt's trades, you're more than welcome to. We have FedEx from Fernando. Maybe you could give us a
Great.
backdrop on FedEx too, because
Yeah,
yeah.
we'll talk about this. Maybe we'll do one other and then we'll wrap it up if that's all right. It's kind of getting on here, but the FTX, okay. First of all, these guys have pre-announced how many times, I mean, not pre-announced, but they've guided. I mean, it's just been real bad news, right? And they're even talking about how, this is what the thing, we're talking about a recession coming. I mean, they're saying their ground volume is going to be the lowest ever, Christmas, ever. Well, we saw what happened here in September when they pre-announced and the stock got crushed. And you know how much the market has rallied in October. This stock's done nothing. It's gone sideways. Now, having said that, if it can finally break out of this thing, this is what, it's a stretch to call this an inverse head and shoulders pattern, but you can see at least in October, trading a sideways range. If we can finally break above a 160 in any kind of meaningful way, it'll be short-term positive for the stock. But there's no question this is a clear downtrend. And I don't like the fundamental backdrop. Yeah, well, look at that again. We'll have to see. This is what the MACD chart. I won't go into that too much, but yeah, it's just, it looks like, you see this thing, oh boy, it's already losing momentum. We got to watch this. If it can break above 160 in a meaningful way, that'll give it a key higher high. That'll be good. But the fact that it has not been able to rally in the face of a 12% rally in the S&P over the last 3 or 4 weeks, it tells you that this stock is just dead money right now. And if it proves me wrong, believe me, I'll change on a dime if this thing can break out of this above 160 in a meaningful way. Again, if it's $160.10, that's not going to do it. If it breaks it out in a meaningful way, I will switch my tune. But it looks like it wants to roll back over, and so I'm staying away from that one for now.
Right, smart there, and that's really how it is with Matty. He's not going to tell you that I like it just because he's a straight shooter, and that's how you want it to be when it comes to your money and all that, right, Matt?
Absolutely.
So yeah, any closing remarks here on your end, Matt, on the markets, and for all the people that just joined, really what they can expect tomorrow, because I know it's going to be a busy day, and this is your time to shine. Like when it comes with the Fed meetings, like that's your time.
And just remember, when you come in tomorrow, we are gonna do a whole lot of nothing in the morning. Probably a whole lot of nothing in the morning. If there's some news, China invades Taiwan, or something like that. But we're gonna do a whole lot of nothing. But boy, that's gonna change at midday in a big way. And we're gonna be there's gonna be a whole lot of shaking going on, as they say, in the afternoon. And we'll be setting up for stuff tomorrow. And then, of course, Friday, we have the employment report. And then next Tuesday, we have the election. So we got lots of stuff coming. So these 2.5 quiet days are going to change to very, very busy days very, very quickly. And we'll be looking at, again, we have several ideas that I talked about that we'll be talking about extensively in the chat room tomorrow. If those of you who are on the tier, already at the tier 3 thing, I said I might not be in on Wednesday. They had something personal I had to take care of, wasn't that important. And then, of course, I forgot, brain fart, and forgot that was Fed day. So needless to say, I'm going to do that at another time. I will be in all day. But anyway, but the point is we're going to be talking about those and then some of the stocks that are oversold because we don't know which way it's going to go. I think it's going to go up and then back down. And we're going to be able to take advantage of it both ways. And then we're going to go into the Friday employment report. We saw a report, the JOLTS report today. That was a little bit better. That means that the interest rates might be holding up. We're going to have a lot of trading to be able to do around that on Thursday. Then Friday we will have the actual employment report, and then we'll have the setup on Friday afternoon for the election. And then on Monday we'll have more setups. Mondays tend to be somewhat quiet days. They won't be this time because we go heading right into the election. So we got a lot of stuff that's going to be going on, a lot of opportunities to make money, and I think even some opportunities in both directions because we do tend to see some wild swings around the Fed meeting, and I think we'll see that again tomorrow afternoon. Remember, 2:00 Eastern time is when the announcement comes out, but you'll see a little volatility then. The big thing will be happening at 2:30 when Chairman Powell comes out and does his press conference at 2:30. That usually goes for about 45 minutes to an hour. We'll see, and then we'll trade around that. But it's going to be, but we'll be trading before then. We'll be as we head into that meeting. We'll already have been started to trading, and we'll be doing some neat stuff. So, for those who've joined today, welcome aboard. We'll look forward to seeing you tomorrow in the chat room. And Rodrigo, thanks again as always. And We'll talk to you real soon.
All right, there you go.
Damn, son, where'd
All
you
right, all
find
right. We
this?
got Chief Market Strategist Matt Maley, folks. Big shout out. Thanks a lot, Matt. I'll see you in the chat room tomorrow. For sure, I will be there in the chat room trading
Sounds great.
with you.
Thanks, Mike.
All right, folks. And that was Matt Maley. For you guys who've never met him, he's a great guy, really smart. Lori, send me an email. Big shout out here. Also, we're giving away a beautiful, nice little cat here. If anybody would like a cat, one lucky person will be getting this cat in the mail. Okay. So we got a couple questions about the chat room. Let me talk about some of the trades before. We're just getting started, okay? But I've been trading match trades for about 2 years. I'm not going to tell you how much, but I've done pretty well with these trades, okay? So you have two channels here. The inner circle chat, this is where everybody's posting. As you can see, this is a fun place to be in. You have, everything from memes, and again, really important. These are all real people, okay? These are not fake bots, fake accounts like you have on Wall Street Bets or any of these other places or Reddit. These are all real members here, paying members that are part of the live room. So we were talking about Tammy. Okay, I remember I signed up Tammy a while ago. It's a great trader. Okay, right there. That's Tammy. We also have James Donahue. James, if you're in the house, dude, you got to let me know. James Donahue is a great guy. I've signed him for a couple things here. And, he's a very active member of the room. And that's really what I want you guys to know. This is a room that even if you're starting out, it doesn't matter. Like, this is the best place to do it. We're all helping each other out. We have a team player focus. We have a team approach. And it's all because we're trading together. It's not like people are trading against each other in the chat room. We're trading as a team. Okay. So, Lori, I want to join. I'll email you as soon as this is over so we can. Yeah, no worries. Send me an email, Lori. And if anybody, we're putting the link, by the way, also. If you do want to join, let me put that in really quick. Okay, so there's a couple folks there. I don't know if you're not part of the chat room, you don't know, but these are all several different traders from all over the world. Sorry. And as you can see, it's pretty active, right? This is every day. Now, then you have in this other channel, by the way, you do have sound notifications there. And it's my understanding, this is at least what they told me, that there's going to be push notifications within 1 or 2 months, right? Then you have the channels where it says Matt's important messages. This is really where you're going to find Matt's trades, entries, exits. If you're new to trading options, I'm telling you that there's no better chat room for you to join for trading, right? It's one thing to learn, I get it, but look, we're in a recession. You need to make money too, right? So you can see it's pretty straightforward, right? We're talking about specific contracts, specific symbols, right? Specific expiration date. We're doing a put, okay? So this is really, if you're new to trading, this is really where you need to be. If you want to do options trading, this is where you need to be because you're going to get all the entries, all the exits, and there's no grayness where it's like Matt will tell you specifically, hey, I just got into this trade and I'm scaling into this trade, or I'm slowly scaling out of this trade. I'm taking maybe 50% of my profits. And then from there, I'm going to leave the rest to see what happens. So once you're covered, again, keep in mind, this is all very straightforward. This is all very simple to follow. If you're trading options, there's no other simpler thing that you're going to find than this, buying calls and buying puts. It's the simplest type of trade you can do in options. So you can see how Matt is pretty straightforward about what he's buying and when he's buying it. You can see there's a timestamp there too. Okay. So everything is pretty straightforward. Yes, everybody will get the laptop, but then also keep in mind that once you join, there's a session on Tuesdays. It's from 11:30 to 12:30. And that's pretty much when you will be in that live webinar, kind of like this with Matt, only that I won't be there. It's just Matt and he runs the whole session. So you do that on Tuesdays because Monday it's kind of like a who knows what, but then Tuesday you kind of get a sense of where we're going for the week. But again, it's really important for you guys to even know like what Matt does. He provides institutional research to multi-million-dollar firms, and you as retail traders, it's not like you're getting the exact same research, but you're getting it through the trades for the active trading, right? So Matt provides institutional research. Okay, these are firms that pay millions of dollars to Matt's company there in the Miller Tayback so that he can provide his analysis on the economy, his analysis on the markets, short, long term. As a trader, if you get access to this, I mean, you're lucky because honestly, retail traders, the most you get access to is some marketing guru, to be honest. The fact that you can bounce ideas, get feedback on your trades, follow up with education things, and also join this community. It's the best thing you'll ever do if you're starting out, because the worst thing you can do is wing it. And second to that is trading alone, right? There's a lot of great members here that I know personally. I've met personally many of them as well during conferences that we do, and it's a great team. I can't talk about the chat room if I'm not talking about the community, because without the community we wouldn't even be here, right? Without the great members that we have there, we wouldn't even be here talking, right? So we owe it all to these members that have been there with us through all these years, especially in the live room, because it's really, the flagship thing that we've launched, we've created here, that I did with Matt. And I know that you guys are going to be really happy once you join. Put aside the trades, the fact that you have a chief market strategist at your fingertips on demand, Monday to Friday, 9 to 5. Okay. Just that as it is good enough. But the trade ideas and all that stuff, that's just part of what Matt does. These are trades that Matt is taking himself. These are not trades that are, being taken like imaginary, right? These are real trades that Matt is taking, and that's why he's posting it as soon as he does it. So everything is done by the minute. As you can see, there's a reminder here that we had the Zoom call starting. So that's, you're going to get an email invite for that. When it comes to the laptop, make sure that you are checking your email, because you're going to get that in an email sent to you. You got to fill out the form. And I'll put the contact there if anybody does have questions. I know it's been a long session. It's been a long day, long week, long month, but the market's still going to be there. Okay. So it doesn't matter if you lost money yesterday, made money yesterday. Tomorrow is a totally new day. It's a totally new day. You might have had a bad day yesterday, but maybe you join this chat room and things start changing for you. I can tell you that if you're trying to do this alone, and if you're new to this, it's like I'm like 90% plus, like super sure you're going to blow up your account sooner or later. And I'm talking also from experience, because I blew up my account twice too when I started and I was winging it. And also I've talked probably to about 7,000 or 8,000 traders here from around the world, every single continent that you can imagine. And I have trading conversations with them, because I also try to find what's the best fit here for you. And you'd be surprised. Like, a lot of people do blow up their account. They're just not telling you. I don't mind saying it here, because at least you guys can use it as an example that obviously there's better ways to learn to trade options. And part of those is doing it with a professional trader, right? And keep in mind, Matt has been trading since the early 80s. Most of the people that are watching this haven't even been alive that long. So the fact that you have that experience, that mentor, that's something you just can't buy experience, unfortunately. I mean, unless you join the chat room. But yeah, Matt's a great guy. His trades have treated me very well. And a lot of the members there, as you can see, I'm just going to just scroll this so that you can see everybody's posting about, things that they're looking at, what they're looking about. We all know in the chat room, just for you guys to know, we all know in the chat room that tomorrow we have a Fed meeting, and that what we're going to do and what we're looking forward to. If you were trying to trade alone and all this stuff, chances are you might not even know, when the Fed is talking. And if you're new, you don't even know what the Fed is. You don't even know what Jerome Powell is and what rates are and all that stuff. So there's a lot to learn. There's a lot to cover, but it's just not a good idea to try to do it alone. Like when you go to school, that's why you have teachers. They don't just send you to school with a book and tell you go and figure it out. The fact that brokerages do that, it's because they make money if you lose or make money. It doesn't matter to them. They'll still churn your account. So they could care less if you're making money or losing money. You're still pretty much, paying them per se. So that's personally, that's what I think. That's the reason why, but honestly, we do things here a little bit different at Benzinga. Our goal is for you to make money. Our goal is for you to really be successful in trading. Does every trade hit? Of course not. And like Matt said, anybody that tells you that is BSing you, right? And in this chat room, we really try to keep it as real as possible with everything that's happening, like things that are happening in the economy, things that are happening with the jobs numbers, with rates, with the Fed. I mean, we all know that Jerome Powell was basically, in my opinion, lying from the beginning. No, man cannot be trusted at all. But I'll tell you, I trust Matt, because Matt's going to give me good picks to trade and make money, right? even if we're buying calls or we're buying puts. And that's part of really what I wanted you guys to see. You have to be agnostic to the fact that the market can go up and it could go down too, or it could go down sideways, right? We're not here to pretend and we know what's going to happen in a month or 3 months. The way that I look at it is that I will trade the market that I have in front of me today. And that's all I have today. I can't guess for tomorrow or the week after. We can only trade the market that we have today. In my particular case, if I have a position in stock in calls or puts, I'll buy it that day and I'll sell it the same day, right? But everybody trades accordingly. Paul says that Powell is trash. This man should be thrown in jail. I agree. And this lady, Janet Yellen, is even worse. They should both be jailmates, in my opinion. Walter, can't say enough about the team at Benzinga. All top shelf. You got it, dude. Slowly expanding my accounts. Hey, Walter, you got to hit me up, dude. Paul, this is I told you we keep it real here. I mean, that's all I know how to do. I can't do it otherwise. But it's really like something that, like, if you're a new trader and you don't even know what rates are or how they impact not just the economy, but also, certain group of stocks and just the market in general. I mean, everybody's got a learning curve, right? And sometimes the learning curve, it can just stay flat for a long time. But then also, if you're following the wrong people, if you're listening to the wrong crowd, maybe some market guru or who knows who, your learning curve can actually go down because you're learning things that are incorrect and you're not really understanding the big picture of things, right? So I can tell you personally that when I got in here to Benzinga, my trading account really started getting a lot better. Obviously not immediately, but because you don't learn in one day, there's a lot of things to learn. I'm telling you, but it's a great thing because once you do that, once you get through those first couple of years, that's whenever you start really kind of really getting comfortable with this, right? It's not like you're going to be a Warren Buffett on day one. Like, what in life do you do that is like that you started today and you're a king? Everything takes time. Everything's a skill that you have to craft, and it's not overnight. It could take, for some people, it could take 10 years. For some people, it could take 5. I don't know how much time you guys are going to put into it, but really all it comes down to is being in the chat room, following Matt's trades. Like, for example, I obviously cannot take every trade because I'm busy here doing other stuff, actually building this chat room, building these services for you guys. But then when I am trading, which I think tomorrow I will be trading, I'm not going to make a move until until Matt calls it. And whenever there's a Fed talk or any type of really high volatility moment, that is when I jump into the market because that's really what I'm looking for, volatility. Obviously, a lot of people here in the chat room, they want to trade more actively. They have the time, they have the capacity to do that, right? But then there's a lot of people that I know that have full-time jobs that are not in the chat room every day. They're just there probably during every couple of weeks. Whenever there's high volatility, they'll make a good trade, and that's it. They don't want to be trading every day. But if you want to, you can do that with Matt. So you'll have access to everything here. Now, the Tuesday sessions with Matt are super educational. We talk about market commentaries overall, and it's probably all you need, okay? Because if you're watching CNBC or any of these places, like, my best advice here, personally, based on my trading experience for the past 4 years, I'm telling you that you should just turn off the TV, okay? And just get in a community, a smart community, not some, again, no Wall Street, none of that stuff, like, these are real people that really want to come here and make money. They're not just gambling their money away, okay? So if you really want to start trading, my suggestion is to turn off the TV and all that stuff. If you want to have it on, but don't take action on anything you read on the TV or anything like that, any headline, okay? Follow the trades that Matt is giving you, because that's really when most people mess up, when they go out and, oh, look at this, they're talking about that, let me go all in. Or, it happens to all of us. We all have emotions, but we have to learn how to control our emotions, not just in life, obviously, but in trading, especially in trading, because that's when your emotions can kill you, right? So all you have to do is follow Matt, his trade ideas, they're all there. And he's pretty much, as soon as he gets into the trade, he's going to put it there. So as an example, he can say, let's find whichever one here. Let's see. All right. So by the way, folks, if you call me right now, I'm in the session. So just know, But we're going to wrap it up here and I'm going to talk with you guys in a bit. I just want to talk about this shortly. So that's the entries. You can see it's pretty straightforward. I know a lot of you guys might be beginners or intermediate, whatever it is. It cannot get easier than this, no matter what level you are, right? You buy a call. If you buy a call, the stock goes up, you make money. You buy a put, stock goes down, you make money. It's that simple. That's all you need to really kind of get, because Matt is giving you everything else. You don't need to find the right contract, because that's already how you're going to lose money. When you go and buy some contract that's way out of the money with an insane spread and no volume and no OI. So again, these are mistakes that I've made, mistakes that I know other traders make. These are common mistakes. These are the easiest mistakes to avoid. It's like, tie your shoelaces if you don't want to trip when you're running. It's like but again, if nobody told you you had to do that, you're not going to do it. So that's kind of the point I'm trying to make. There are some mistakes, many of them, that you can avoid just by not trading alone, just by trading with a community of intermediate to advanced traders. Because if nobody's telling you that, you're just in a vacuum. You just, you're just thinking by yourself, and there's no really back and forth. There's nobody to really give you feedback besides yourself. And that's, as biased as you could be, right? When it comes to trading, you need to recognize that you're not going to be right all the time. You might even not be right at any time. And that means you need to learn. You might need to join a community that can kind of guide you through, the process itself. Because again, there's a lot of things to cover. And the market that we're in today is not the same market that we were in 2020. It's a totally different market. We're literally in the middle of a recession, huge geopolitical issues. National debt is through the roof, over 31 trillion. Rates are insanely high, so that debt's super costly to service. There's a lot of things that are happening here, including things with chips in Taiwan, all the way to grain and oil in Ukraine that we didn't have in 2020. And also we didn't have unlimited, QE. So now we're in a different stage of the process, right? And we've been in QE for so long that most people don't even know what the hell that is. So overall, there's a lot of things to learn besides just buying a call and buying a put. And I just want you to know that, because I don't want you to think that trading is just as easy and superficial as buying a stock, buying a call and buying a put and selling it. There's a lot more. There's a lot more analysis that goes into it. Personally, I'm like a nerd and I like to know all these things. I like finance and I find it very interesting. I understand not everybody might feel that way about this, but I feel that if you're trying to be a successful trader, you're going to have to do it at one point. And you're going to have to learn these things sooner or later. The sooner the better, because you're going to lose less money. And you want to really get out of that early beginner trading stage where you're trying to understand what is the Fed and what is this. And because once you get over that, you're going to be building on top of different blocks of knowledge, just like you do when you go to a college or a high school and you go to first grade, second grade, third grade. You learn this and then you build on that. But you can't just go to trigonometry and you never learned anything about adding and subtracting, multiplying, dividing. You can't skip steps. And unfortunately, a lot of people in this life want to take the short route. They want to take the easy route. And that doesn't work for many things. It doesn't work for anything, in my opinion. So do you want to find a holy grail that gives you 100% accuracy? That did not exist. The thing that you can do to really become a better trader is really joining a community with the right instructor, the right people there. I don't know anybody with as much experience as Matt that is out there doing this, because anybody by the time they have 40 years of experience, they're probably already retired. And Matt has at least another 30 years to go from what he told me last time. So there's still a lot of juice to get out of this chat room. And I think that if you're new trading, this is probably going to be the best place for you to go if you're trying to trade, if you're trying to make money with options, because it's pretty straightforward. You buy this call, you buy this put, and that's pretty much it. There's really nothing more to it. So I want to give a big shout out here to everybody. Everybody that's been in the session. It's been a great session. I want to give a big shout out to Lori. Big shout out to Miser. What's going on? Miser, send me a quick email. David, why didn't you join last week, David? Okay. And I was like, man, I need in on this. So Matt is as straightforward as it can be. Okay. And I feel that's how you have to be, especially with trading. But all right. So we've gone through a lot, folks. I think that kind of covers the chat room. I just wanted to give you a little bit of words of experience that I've seen here with different traders, with myself, my journey with trading, how that can kind of help you. And you can just look at me as another chat room member, because even though I'm not there every day trading, like tomorrow I will be there, but I'll pop in there, and this is probably like, this is the chat room that I'm trading from. Okay. So do I make every trade? No, because I'm super busy working here. But days like tomorrow, I don't miss them. This is what I've been waiting for like more than a week. Okay. This is the day that I've been waiting for, tomorrow, when the thing happens. So Deborah, good night to you too. I think it's time to wrap this up here. So big shout out to everybody. Let's go. Let's go.
Damn,
All right.
son, where'd you find this?
New sound effects. I got a new DJ here. All right. So big shout out for all you guys. I hope I can see you guys in the chat room tomorrow. I'm going to put my contact there. I'm sorry, I forgot to put it. So that you guys can, if you want to email me, make sure to email me. That's the best thing you can do. That way I can have you locked in there. And if you have questions about math strategy, if this is a fit for you, let me know. I'll be happy to go over this with you. Just reach out. We'll be here for a few more minutes. We're going to leave the stream on probably for a few more minutes, just because, if you do join while we're live, you'll get some more stuff. But just make sure that you do it before midnight. Like, that's the main thing. You're going to get bonus trade alerts. You're going to get a whole bunch of strategy sessions. Paul says he just joined. Let me check something here. Hold up, guys. And you know what? I haven't even given any of you guys shout outs, which is
Damn.
so rude of me. Sorry, Paul. That's not me. Okay. All right. We have to give a big shout out here. PMV 1019. I know that's Paul. That has to be Paul. Let's go.
Damn, son, where'd you find this?
Yo. All right, Paul. You got the ultimate air horn hook up there. So Favor, can you help me? I want to join in a circle. Favor, you click on that link. It's going to take you straight there. Let me post it in there for you. I mean, it's pretty much there. You can just click it there. It's going to take you to the checkout. It already has the discount applied so that you don't have to do anything. It's going to renew at the same price next year. It's not going to change. You're going to get the free laptop. You're going to get the bonus trade alerts, bonus strategies from Matt Maley. And also, if anybody, wants to join everything like that, don't worry. We'll give you guys Benzinga Pro. It's all good. Paul, I hope I can see you in the chat room tomorrow. You'll see me there. I'm not posting anything in the chat room. I'm just watching Matt's trades. But I'm telling you, you definitely want to be part of it. And if you have a 30-day money back guarantee, like, let's just be real about this. Worst case scenario, you get all your money back. That's probably the best worst case scenario that I've heard in my life. Best worst case scenario. Okay. So Paul, I'll be there 1,000%. I'll see you there 1,000%, dude. Favor, if you have issues signing up, send me an email. I've been here for 2 hours, pretty much pulled in. I'm already 12 hours in for the day. I'm about to start my second shift and start talking with the rest of you guys. So it's going to be a long night for me, but I want to make sure that all you guys can get into the live room so that tomorrow in the morning, everybody's ready, good to go. You can have access to the live room and you're not missing on any of these trades. Because once this whole thing starts going off, you're definitely going to want to be in the chat room. All right. Even if it is just for tomorrow, but you're going to get to see a little bit of what we do. It's a great environment, great for learning, great for trading. I think everybody should go through these chat rooms at least once in their life. But yeah, everything aside, folks, thanks a lot for being here. And hopefully we'll see you guys in the chat room tomorrow.